10 tips to navigate this market if you are a buyer. We've heard interest rates are going up, houses are sitting on the market a little bit longer. So I wanted to kind of just give you a really high level overview or high level understanding of, things that can really benefit you in this market. So let's dive in. So number one, get a snapshot of where your personal finances are, right? So what does this mean? Are you going to make a switch in your job? Are you going to take less hours? Are you going to be on maternity leave? Are you going to be on disability leave? So make sure that you have your finances in order, and make sure that wherever they are, that it either stays consistent or you at least have some time to get consistent with your income, right? So for example, if you are part-time right now and in a month you're going to dive into being a full-time employee. So make sure that you have all of your finances in order, and make sure that you are working full-time, because if you're working full-time, it makes it a lot easier to get qualified for a home. Why? One, because you're working full-time hours and you're making full-time money. So that is number one. Number two, right? Number two is know the difference between good debt and bad debt. So right now, I would honestly suggest to eliminate all of the smaller payments that you are paying, whether it's on your credit card or whether it's that small student loan that you can pay off, because that's just really going to harm you when you go into the qualifying process for a home. So remember, we take either 45 or 50% debt to income ratio, depending on the type of program that you're going in, for your debt completely. So that includes your mortgage payment, and if you have car payments, student loans, credit cards, personal loans, that all gets taken into consideration, and it gets looked at, and it can negatively harm you, right? So take a look at the good debt and the bad debt. Good debt would be if you already have a house, that's good debt. Or if you have a credit card that you do pay off every single month, right? So keep that in mind. Make sure to take care of these debts. Number three is, a lot of lenders won't like to admit this, but make sure you're shopping around for the most competitive rate. And remember that the lowest interest rate isn't always the best interest rate for you, right? A loan officer needs to take a look at your entire picture to know what is the best program for you, and what is the best interest rate for you. Do you want to come out of pocket the least amount as possible? That might look like a higher interest rate, right? Or do you know that you're going to have this house forever and you're never going to refinance and you're never going to touch it? So then you might want a lower interest rate. But we all know, statistically speaking, people either move or refinance within the first 5 to 7 years of being a homeowner. So make sure you get a competitive analysis from your loan officer, because that is extremely important. Remember, the lowest rate isn't always the best rate. Keep that in mind. Number four, let's take a look at your credit score, right? If your credit score is not where it needs to be or not where it should be, make sure that you come up with an action plan to get it to the best possible score you can, because this will give you the best option for your interest rate and programs. So the higher the credit score, the better the interest rate and the better program options that you will have. So even if you're not ready right now, connect with the loan officer and let them know, hey, I want to run my credit. I want to see where it's at. I want to see if there is room for improvement, because if there's room for improvement, I want you to give me that roadmap and let me know how it looks, what I need to do, what do I need to pay off, so that you can have the best possible credit score for your specific situation. And at number five, make sure that you are checking your debts. So whether that's those credit cards that you have, whether it's a small installment loan that you have, your car loan, make sure you're keeping up with them. And the reason why I say this is because I've seen it happen where we have borrowers who forget that they had a $2 balance on one of their credit cards. And because of that $2 balance, they were late 30 days on their credit card. And that doesn't go away, friends. That stays on your credit and it will negatively impact. So number 5 is keep up with your debts, whether it's that small credit card that you only have $1 or $2. Here's a tip and a side note. Have all of your credit card payments on auto pay, right? That doesn't harm you. Have it on the minimum auto pay. That way, you know that you are never going to forget to make a payment because it's on auto pay. My wife taught me this trick quite some time ago, and I thank her for that all of the time, because there is some times where I do forget to make a payment, and then I remember, oh, it's going to come out already. I already have it scheduled. So that is huge. And that ties into number 4, making sure that your credit is in the best possible place for the specific program that you want to be in. And number 6, make sure you have a solid savings account. Make sure that you have enough money saved up for your down payment, closing costs, or whatever that looks like. Make sure you are still saving money, and make sure that you've contacted a loan officer, and hopefully they've given you a game plan or a roadmap as to where you need to be with your down payment, your closing costs, and any additional funds that will come up during the transaction, or that might come up, whether that's your appraisal, whether that's the home inspection, whether that's checking the septic tank, depending on where you're at. So make sure that you have a plan for your savings. And number 7, try not to follow where interest rates are at so much, right? This game plan should be more geared towards your specific situation and where you are at in this particular time. Remember, the market is going to be like this. So it's going to go up, down. It's going to have good months, good years. But the important thing is to stick to your plan and make sure that you follow that to a T, right? It's like if I'm working out and I'm doing great in the gym, but my diet is awful, I'm not really going to see any results, because it needs to be a complete plan where we take a look at how often am I working out? What am I eating? Am I hydrating myself? Am I sleeping enough time to allow my body to recover? So that all goes into this, right? So make sure that you stick with your plan and you follow it to a T, because it could be the difference from you getting approved for a $500,000 loan or a $400,000 loan. And number 8, think about specific career opportunities that you can take, or think about other income opportunities, right? And so this has to tie in with your game plan. Are you going to buy in a year or 2 years, right? Is there an option for you to get a promotion, right? Is there an option for you to start what they call side hustles, right? Where you're washing cars, and that's documented and everything is by the books on that specific business. But can you do something? Say your time frame is a year or 2 years. Can you do something to increase your income during that time? Look at little options like that, and see what you can do. I know one of my clients, we had a 2-year game plan. FICO score was not where they needed to be, anywhere close to it, because of prior decisions that they've made. But our 2-year game plan was save enough for their down payment for the house. And if you wanted to get qualified for more, you either have a cosigner or you have another job, right? So within this 2-year game plan, we were able to do this, and they just closed on their house, depending on when you're watching this video, a couple of weeks ago. They got another job. And they saved enough for the down payment, worked on their credit, but it all comes down to following that roadmap and following that game plan. So think about it. If you have the opportunity to either get a part-time job, start a side hustle, whether you're a photographer or videographer, artist, whatever that looks like specifically for you, keep that in mind, and see if it fits within your specific game plan. And number 9, please do not listen to the media. Do not watch the media. Their whole game plan or their whole thing is to get views, to get clicks, to get people to watch their TV station, right? That's why they are doing what they are doing. So tune out the news, tune out any of the doomsday hype, where the market is crashing and real estate is not safe and rates are terribly high. I always tell my clients, look, if you are in a good place to buy a house, then right now is a good time to buy a house. If you're not, then it is not a good time to buy a house. And that is why it is so important to get with an individual who's really going to look out for you, your finances, and your specific situation, because you might not be ready right now, but you might be ready to buy. I mean, you can buy, but you might not be ready to buy. So are you going to be over leveraged, right? Is that what's in your best interest right now? So that's why it's so important to get with an individual who really has what's best for you at heart, right? That's what's important. So number 9, do not listen to the media. Stay away from them. Speak with a professional. Speak with somebody who's doing this day in, day out. And number 10, continue watching us. Continue reading our articles, because we do put a lot of time and effort into what we are putting out, right? Because we want you to stay informed. We want you to be educated. We want you to know what's going on without all the other fluff, with all the other doomsday fluff. We want to give it to you how it is. And that's why I enjoy doing these episodes, because it's what I strongly believe in. And we are here to inform and educate and empower you guys to make educated decisions. So guys, if you guys found this episode useful, valuable, informative, give it a like, give it a share. Leave us a comment. Let us know what you think down below. Until next time.